Even one of the most popular digital assets like Bitcoin is traded at different prices depending on markets and exchanges. With this in mind, it is entirely logical to think that such differences may represent opportunities for profit. The consideration is certainly not wrong, but it is not as simple as it might appear at first glance. Let us look together at how cryptocurrency arbitrage works in detail. In some ways, cryptocurrency arbitrage is no different from traditional fiat currency arbitrage. The idea behind this investment technique lies on the possible exploitation of price differences for the same asset in different markets. Going into detail, we can see that the definition of arbitrage involves simultaneous buying and selling of a given asset, with the aim of profiting from the price imbalance. Simply put, it involves buying low and selling high. The price differentials applied by different cryptocurrency exchanges can be particularly substantial in some cases. This is why some traders find this opportunity decidedly attractive. There are two different types of arbitrage. Regular arbitrage. This refers to the buying and selling of the same digital asset on different exchanges with significant price differences. Triangular arbitrage. In this situation, there are price differences between three different currencies on the same exchange. In other words, an attempt is made to exploit price differentials through various conversions. Some specialized companies offer evolved tools intended for automated arbitrage of cryptocurrencies, but both approaches can potentially prove profitable. Certainly, triangular arbitrage can be more difficult to manage, however, especially for those taking their first steps in this world. Why do cryptocurrency arbitrage? The reasons why cryptocurrency arbitrage can be attractive from a profit perspective are numerous. Among the main ones we can report: quick profit. If everything goes according to plan, cryptocurrency arbitrage allows you to quickly increase your capital, certainly faster than normal operations. Numerous opportunities. There are more than 200 different exchanges in the market on which buying and selling of cryptocurrencies is possible, so a very large number of profit opportunities. Cryptocurrency markets are unstable and young. Almost all cryptocurrencies are subject to high volatility, so they experience sudden increases in value, and equally rapid decreases. All of these price disparities provide optimal conditions for arbitrage. Less competition than in traditional markets. Arbitrage, as anticipated, is not just about cryptocurrencies, but not all traders are willing to engage in it with digital currencies. This means that the crypto environment is subject to less competition. Price differences. The price variations of cryptocurrencies can definitely be interesting from an investment perspective. In some cases they start from 3% to 5%, but in other extreme situations they can exceed even 30%. With these assumptions, it is almost unnecessary to point out that cryptocurrency arbitrage is definitely a more efficient method of investment when trading with high amounts. Small amounts, in fact, can generate minuscule profits, or at any rate not worth the interest of many investors. Arbitrage activity, simply put, can be profitable only at the point when research, calculations, and estimates are made. Cryptocurrency arbitrage costs and profits, how to calculate them. Obviously each situation is its own case, but as a general rule, the following fees should be considered. Maker and taker. To be considered at the purchase exchange. Transaction fees. Deposit fees. To be considered at the exchange and the sale. Maker and taker. On exchange on sale. Withdrawal fees. In addition to these items, we find some other small variables to be taken into account, however. Market volatility. Some cryptocurrencies have larger price variations than others, so prices can change very quickly. Regulations and taxes. Any profits are subject to taxation, including those from cryptocurrency arbitrage. Obviously in this case we are talking about varying amounts depending on the country. Cryptocurrency arbitrage, which exchanges to rely on. Once you have considered cryptocurrency arbitrage as an investment opportunity, you need to identify which exchanges to rely on in order to register on favorites. In general, the procedures are very similar to each other, but some companies require a few additional steps such as identity verification, which can take up to a few weeks. When choosing an exchange, it is advisable to take a few variables into consideration, and among the main ones we can report. Commissions. Needless to say, the commissions charged on trades are one of the first parameters to evaluate when choosing an exchange, because they can greatly influence the final result. From this we can see how it is necessary to choose low-cost, albeit reliable, exchanges. Geography. Before making a trade, it is a good idea to check whether the exchanges chosen have limitations in the country of origin. Reputation. Before choosing a cryptocurrency exchange, it is advisable to consult reviews from users who already use its services. After all, to do arbitrage you need to deposit your own funds, so it is better to choose transparent and regulated companies. Transaction timing. The timing of blockchains is not all the same. Some are in fact immediate, while others can take up to an hour or more at peak times. Withdrawal times. Another variable to consider is withdrawal times. Some companies make withdrawals manually once a day. Before choosing an exchange, however, it is necessary to understand the rules. Account verification. Some companies may not allow withdrawal of funds and full use of the markets before verifying your account. In some cases a few days is sufficient, but in others it can take weeks. Market liquidity. Exchanges do not all have the same liquidity, and sometimes it can prove to be insufficient, especially in large crypto arbitrage situations. Those listed are just a few of the main variables to consider when choosing an exchange, but in reality before starting to arbitrage it is necessary to make thorough study to avoid unpleasant surprises later on.